Welcome to the world of trading, where success is determined by more than just market knowledge and technical skills. In order to truly excel in this field, one must also master the mental game of trading. The mental game of trading refers to the inner self, the part of us that drives our decision-making process and fuels our performance. By harnessing the power of the inner self, traders can unlock their full potential and achieve outperformance in the markets. The psychology of trading is a complex and multifaceted topic that can have a significant impact on a trader's decision-making process. Emotions such as fear, greed, and hope can cloud judgment and lead to poor trading performance. Research has shown that emotional biases can cause traders to make irrational decisions and engage in risky behavior. For example, studies have found that traders who experience losses are more likely to take greater risks in order to recoup their losses, which can result in even greater losses. To overcome these emotional biases, it is important for traders to reflect on their own experiences and emotions when trading. By becoming more aware of their emotional triggers and learning to manage them, traders can improve their decision-making process and ultimately their trading performance. The inner game is the foundation for mastering the mental game of trading. It's about understanding and harnessing the power of your inner self to fuel your trading outperformance. In other words, it's about developing a strong mindset that allows you to stay focused, disciplined, and resilient in the face of challenges and setbacks. This is critical for success in trading, where emotions can often run high and lead to poor decision-making. Developing inner strength and resilience is essential for mastering the mental game of trading. One practical tip is to focus on developing a growth mindset, which involves viewing challenges as opportunities for growth rather than obstacles. This can be achieved by reframing negative thoughts into positive ones and setting achievable goals. Another strategy is to focus on your strengths rather than your weaknesses. By identifying and building upon your strengths, you can increase confidence and improve overall performance. This can be done through self-reflection and seeking feedback from others. One of the key components of mastering the mental game of trading is learning to control your emotions. Emotions can often cloud judgment and lead to impulsive decisions, which can negatively impact trading performance. To master your emotions, it's important to develop self-awareness and recognize when you're experiencing strong emotions. By acknowledging these emotions, you can then take steps to manage them effectively. There are a variety of techniques that traders can use to stay calm under pressure. One effective technique is deep breathing, which can help to reduce stress and promote relaxation. Another technique is visualization, where traders imagine themselves in a calm and focused state. Additionally, traders can practice mindfulness, which involves being present in the moment and observing thoughts and emotions without judgment. By practicing these techniques regularly, traders can improve their ability to stay calm and focused, even in high-pressure situations. In conclusion, we have learned that mastering the mental game of trading is essential for achieving outperformance and success in the markets. We must harness the power of our inner selves to overcome the psychological barriers that often hold us back from achieving our goals. To do this, we must focus on building inner strength and resilience, mastering our emotions, and developing a growth mindset. By doing so, we can stay calm under pressure and make better decisions based on logic and reason rather than fear and greed. Thanks for watching. Like and subscribe, and we will catch you on the next one.